Bloomberg Audio Studios. Podcasts, radio, news.
Then comparisons are being made to Liz Truss, but is this more Callaghan than Truss? Is this more 76 than 22?
Possibly. What we are seeing in the UK, Guy, is a train wreck in slow motion.
Welcome to the City of London.
The City of London.
The next station is Bank. Please mind the gap between the train and the platform.
The financial heart of the country.
The City.
The City.
Welcome to In the City.
Stand clear of the doors, please.
So, Dave, we're putting a bonus episode out today because there's been a lot of turmoil for UK assets. Now, this is probably not only a UK story, but they're definitely at the forefront of this global rout, sparked by, I guess, latest threats of tariffs and worries that inflation will remain elevated in the US for longer than expected.
Absolutely. I mean, as I'm sitting here in New York and, there are echoes of a few years ago because the UK turmoil in the markets is breaking through. People in New York and around the world are asking what's going on with UK assets, why investors seem to be fleeing. We're seeing falls in stocks, falls in bonds and the pound at the same time. All of that adds up to a real lack of confidence in the UK as a place to invest.
Yeah, and of course, the global bond sell-off is unnerving for many reasons, but of course, it changes expectations on government's fiscal operations. So we're bringing you the special episode, this emergency edition of In the City, to try and understand what it all means for the Chancellor Rachel Reeves. I'm Francine Lacqua in the London studio.
And I'm David Merritt here in New York.
And today we're discussing how the UK bond sell-off is putting Rachel Reeves' economic projects on the brink. And with us, Phil Aldrick, our senior reporter covering the UK economy, and of course, a regular on In the City. Phil, thank you so much for joining us. It's been a wild, wild week for UK assets. Why?
That is the question. Why now? It's a bit of a quandary. I mean, obviously, what's been happening is, US bond markets have been moving. Donald Trump has been spooking people with tariffs. So there's this backdrop of sort of less certainty about the outlook. But and the UK has been most exposed of the major economies to that. We've seen this big increase in bond yields, so government borrowing costs are soaring, and the pound is falling, which is indicative of capital flight in the UK. So people are losing confidence in UK assets. So why is it happening now? It seems that people have, or why is it happening particularly to the UK? Investors seem to be sort of making a judgment that Reeves's budget isn't going to deliver what is necessary, both to put the debt on a sustainable footing and to bring inflation down. And so there seems to be this kind of this nervousness now about the outlook. But having said that, it seems a little unfair to put the UK right in the crosshairs of all this, given that we have a stable government. By comparison, you might say France looks like a bit of a basket case at the moment, and yet the UK is the one that's really getting it in the neck.
Phil, I do remember the conversation we had when you came on after the budget, and I was struck at the time. You were pretty surprised at the scale of the tax rises and the spending. It blew through your expectations. And you said at the time, I remember clearly, we talked about this question about the headroom, and we talked about how there isn't really room for manoeuvre here if there's a bit of a shock. And of course, back then we didn't know that Donald Trump was going to win the election, and yet it was a big possibility. And you said this is a risky budget. There's not room for manoeuvre. And and lo, it came to pass. I mean, we've seen more turbulence in markets, and the UK has really copped it. I mean, I think you called it right, didn't you?
I'll take that one. It may have been one of the few times I did. But the thing is, the headroom is very thin. It's the third smallest headroom the Chancellor has had since the OBR was set up in 2010.
So is that her big mistake, do you think? Like, not trying to kind of put the country's finances on a more stable footing and fund public services, but she just didn't give herself enough room for manoeuvre in the world we're in now.
I think that was clearly a risk, and OBR clearly flagged that risk in the budget in October. And I do think that was an error. I mean, if she had gone with the sort of more traditional levels of headroom, which would be 25 billion to 30 billion pounds, this is sort of pre-2019 levels, then this would not have eroded. She would have eroded half her headroom. She'd still have, enough to say, I can meet my fiscal rules. The whole point about the headroom is it's a buffer against unexpected shocks. If you leave yourself nothing, which is, this, as I say, it was the third slimmest headroom ever, then you are exposing your rules to movements in markets like this. And if you're saying that what you're trying to provide is fiscal stability on which you can then build your growth program, and you've created such a small buffer that you end up creating policy instability because nobody knows how you're going to fill this hole should markets move against you. You may have to raise taxes, you may have to do spending cuts. That sort of completely undermines the sort of edifice of her project.
Yes. So basically, if you have a lot of pain inflicted by these rapidly rising borrowing costs, if you have razor-thin buffers, which is what's happening. So the fact that the 10-year and the 30-year really moved makes it so much more difficult for Rachel Reeves, especially in a week where there's so many bond auctions by the UK. Does she need to now just find extra money?
At the moment, she does. I mean, markets are fickle. It could all move back. And obviously, we did have a big move in just the days after the budget, actually. In fact, her entire headroom was wiped out within about 3 or 4 days. And then the markets came back and readjusted again. And she had much of her headroom was restored. And now they're going back again the other way, and they've taken away even more. So she's now effectively in deficit. She has made it very clear that her fiscal rules are non-negotiable. They're her ironclad fiscal rules. So she is going to have to, on March the 26th, if nothing else changes, when the fiscal update is presented by the OBR, she is going to have shown that she is repairing to some degree or replenishing the full 10 billion of headroom she had. And that will require tax rises, it'll require spending cuts, could require welfare cuts as well. But she's going to have to do something. At the moment, they're sort of indicating that there's the spending review coming in June, and the indication is that they'd rather do it through just trimming spending.
I mean, as you're describing it there, Phil, we're talking about the kind of the buffeting of this government by the markets. And you've got a story up. And your first paragraph, you say 6 months into her job, her project is close to being in tatters. How did it go so wrong so quickly? They talk so much in the election campaign about stability, fixing the foundation of the economy. Is it external shocks here? Is it what's going on globally? Or is the blame really to be, do we need to point the finger really at her and her policies?
I mean, there's a bit of both. But the reason why the project is, in deep trouble is because the entire project is based on growth generating the returns that will deliver the public finance, the improvement in public finances, so that, basically the debt coming under control. Also, all of the money for public services. I mean, she did 40 billion of tax rises, which was, the fundamental way in which we fixed the public services. And that's the goal. But then, because of the manifesto pledges that you couldn't just do broad-based tax rises, she's had to effectively put it all on business employer, through the payroll tax, which is then causing uncertainty and problems for business about how that then comes through the pipe. Will it come through in higher prices? So consumers will have to pay more, and that's inflationary. Will it come through in squeezing wages? I mean, there's been a combination of sort of missteps because it's not clear exactly why, but obviously there were traps set by the Tory party during the election, and then and then subsequent decisions that were made. But ultimately, if she doesn't get the growth, it's going to be very difficult to fix the public services, and all the pledges she's made on not putting taxes on working people, that may have to be broken in the worst case scenario. And so the project does begin to look like it can unravel.
And I think it's a good reminder that the UK is a small open economy. And I think Mark Carney had said, it relies on the kindness of strangers. This is an economy that's extremely dependent because of the amount of debt on foreign buyers of gilt.
Well, it's not just the debt, actually. It's also that we have a current account deficit, so our trade position. So just to pay our way in the world, we require a lot of money from foreign investors into the UK. So we've got this. I mean, in economics they talk about the twin deficit of the budget deficit and the current account deficit. So the government cannot finance itself without the kindness of strangers, those overseas investors, and just in general, like business and the way that the economy operates, it also needs that money from foreign investment as well. So if we spook those foreign investors, they either will take their money away or they'll say we want to charge us a bit of a premium, and that's what's happening now, because that's why we're seeing those borrowing costs going up.
What's also struck me this week, Phil, is kind of what's going on in the real economy. We've had trading updates from some of the big bellwether retailers talking about Christmas, and it's this contrast, because a lot of them have said, haven't they, look, so we had not a bad performance Next, Marks and Spencer's sales up, but then they've had these very gloomy outlooks. They said, look, we're being piled on with extra costs from wages, from the national insurance hike, uncertainty in the future, and that has caused the share prices to take fright a bit. So is it underneath the hood of the economy, there's a lot of trepidation from business, and is that feeding through to people thinking, well, growth is going to be really challenging, and that makes Rachel Reeves's whole project much harder to achieve? Yeah,
there's definitely a sentiment issue going on in the business world. I mean, in a way, I do look back to sort of post-Brexit, where there was absolute ridiculous level of uncertainty, and we've got a very small fraction of that level of uncertainty caused by all these NICS rises in the national living wage going up, and obviously what happened is that business learned to live with that uncertainty, and this will be much easier to learn to live with than Brexit. So I'm a bit cautious about the amount of damage that all this will ultimately do to the growth potential, but certainly businesses are saying that they're worried, and it's not helping sentiment. So Labour does have a growth strategy, which is this big investment plan and basically the reform agenda to get planning obstacles removed. Problem with that is there's a sort of temporal issue. You've got, in the short term, you've got all these tax rises coming through, which will inevitably have some kind of dampening effect on growth. But then the investment comes through later. So you then get the growth later on. And so the Office for Budget Responsibility is forecasting more optimistic growth trajectory towards the back end of the forecast. But in the short term, we're obviously facing this particular conundrum. And so markets are looking at what's happening immediately, and the budget forecasters are looking what's happening, what's longer term, and obviously the government has always been trying to think longer term. It's a question of whether they can get to that longer term thing without being completely disrupted by the market moves.
Phil, as soon as you have big market moves, then the market it's also almost a self-fulfilling prophecy, right? And I know you wrote about the fact that you have these big move in borrowing costs in gilts, but also pounds. And so you just have to make sure that investors don't completely lose faith. There's been a lot written about the speed of the moves and the fact that it was a little bit like the Liz Truss mini budget. That was like a horror show. Is the market much better placed now in terms of being strengthened since that budget, or is it more like the 1970s debt crisis?
Well, Martin Wheels, the former Bank of England rate setter, who's drawn this 1976 analogy when the UK went to the IMF for a $3.9 billion loan. Obviously, the issue here is whether markets are going to basically just turn against the UK entirely. I'd be cautious to say either scenario is the outlook at the moment, because we had huge short-term movements and they kind of catalyzed into massive catastrophes through the LDI crisis that we had. We're having smaller moves now. It's kind of orderly. I mean, I think Deutsche Bank have a note out there. The foreign exchange desk suggested, or they were saying that in a way, the fact that this is not an acute crisis like Liz Truss is kind of worse, because it's actually saying people are genuinely worried about some of the underlying dynamics in the UK economy. But it does mean that you can get this kind of chronic picture for the UK trajectory, which can then become a dominant narrative. But that's not as dangerous in terms of immediate risks as a kind of complete acute catastrophe overnight, which can absolutely, as we saw in 2022, destroy a premiership.
Yeah, in some ways, are we still kind of living? I mean, after Rishi Sunak took over and Jeremy Hunt, they talked a lot about repairing the damage to Britain's reputation internationally from the Truss debacle and, what was it called? The moron premium on UK bonds and all that. And that seemed to have worked. But is the revival of these questions, are we still kind of seeing the legacy of that shaking of the foundational belief that Britain is a good place to invest at the moment?
You can't help but think that, right? I mean, the UK has historically been a safe haven, and suddenly you have that Truss situation where, we can mess things up so badly that it causes a massive market panic. And, for a brief period, George Osborne in 2010 used to say, we got to worry about our sovereign position because there's the Greek debt crisis and we could be like Greece. And it always seemed like a lot of nonsense and a lot of politics. And suddenly, for a brief 2-week period, we kind of did look a little bit like Greece. And so that might have changed people's, the way people view the UK. So definitely don't think it has helped. The problem with Labour is that Labour is always, starting off on the back foot with markets, and financial markets will be less sympathetic to policies that they undertake. So should the Tories have done exactly the same thing, you could be pretty sure that they would not be getting as sharp a backlash as Labour are, just because of the history, really. So it just does make life a little bit more difficult for Reeves and Co.
So Phil, going forward, because of the market moves, basically this week, it basically wiped out the spending buffer of around £9.9 billion that Rachel Reeves has. If it continues, she'll have to find extra money. Do we have an emergency budget? Is it too soon to say? And if we do have something that she needs to do quickly, she's ruled out tax hikes. So does she just have to cut spending?
Yeah, so they're in the moment they're doing the spending review conversation. So the departments are seeing Darren Jones at the Treasury. He's the chief secretary who helps set their budgets. And the message effectively is that the spending envelope, which was set in the October budget, cannot go higher, but it certainly can be smaller. And if they need to find a few billion quid, they can just basically trim it from the sort of, I think it's about £700 billion of departmental spending, annual departmental spending. So, in that scheme of things, it's not an awful lot of money. Personally, I would not be surprised if we see some fiddling of the aid budget, which has already been dropped from 0.7 to 0.5, and they obviously need to increase defence spending. So, they can I don't know if they can change the accounting treatments and move more of it, just move money out of aid into defence. But they'll be looking for painless ways of doing this, because one of the problems that you hear from, investors is that, financial market investors is that there's potentially a credibility problem if they just try and cut departmental spending, because that was exactly the fiscal fiction that nobody believed that the spending trajectories from the March budget, when Hunt did his final budget for the Tories, no one believed those spending trajectories. And that's what Labour had to fix. And that's what the £40 billion of tax rises was for. If you go back, if she pushes back and says, actually, now we're going to cut those budgets from where we've put them in October, the markets may just think this is nonsense. It's another fiscal fiction. Your credibility, that's not going to wash, and we're going to still turn against you because what you're doing is trying to trick us. And I think we've got to this point where you just can't trick the markets any longer. They've reached the end of the tether.
Yeah, we've heard some attempts to calm the markets, and the chief treasury saying that the market moves are orderly and all this stuff. But just on the politics of this as well, the chancellor's gone off to China, hasn't she, on a trip, and some discussion about whether that was the right thing to do. I hesitate a little bit, but I'm going to say anyway, about remembering Kwasi Kwarteng going off to Washington at the height of the Truss debacle, and of course, on his way back, he didn't have a job. I don't think I'm assuming you don't think we're quite there yet. But is it wise for the chancellor to fly to the other side of the world when the markets are convulsing like this?
I don't think it's. I don't think it's a problem. It's because it's not acute. It's because it's not like Truss. I don't think it's comparable. I mean, actually, that 1976 analogy is. It's similar, because Dennis Healey was on his way to Washington. He was the chancellor in 1976, and he had to turn around at the airport and head back to the Labour Party conference at the time and tell them that they're going to have to tighten their belts. But I think she should go to China, and she should be looking. They should be looking beyond this, because this is something which can be addressed in coming days. Obviously, on Monday, if the markets convulse massively, she should be back in time to deal with that. Sorry, just come back to your story, Phil. If the project is close to being in tatters, if it becomes to be in tatters, can our first female chancellor in 800 years survive in this job much longer? Or will she become a victim? It's a good question. That's one question I've been asking myself. If the markets turn absolutely violently against them, and they have to rip up their manifesto commitment and actually start raising taxes. This is an extreme scenario, which I don't think anybody thinks is going to happen. But should that happen, would she be the sacrificial lamb? I don't know. You look back to 1976, Dennis Healey, he survives as Chancellor for another 3 years. Labour doesn't have a track record of chopping and changing like the Tories do with their leaders. Several, how many chancellors it was. But who's there? Who would replace her? Yvette Cooper might be a reasonable choice. The others. Annalise Dodds was Keir Starmer's first choice for Chancellor in opposition, but he replaced her. Ed Miliband, obviously, he's a former Labour leader, so he potentially could do it. But it's not clear that there's anyone better than Rachel Reeves.
Phil, thank you so much.
Thanks very much.
Thanks for listening to this bonus edition of the In the City podcast from Bloomberg. It was hosted by me, Francine Lacqua, with Dave Merritt. It was produced by Summer Sadi, production support from Moses Andam, and sound design by Blake Maples. Special thanks to Phil Aldrick. Please subscribe, rate, and review wherever you listen to podcasts.